Hello and welcome to our project for Emory University's Decision Tools and Visualization class by James Jin, Anya Mates, Zainab Raji, and myself, Tim Kim. And so we have created the Financial Valuation Toolkit, which is essentially an extremely quick and easy automation of a DCF analysis, along with a few other things. When creating the toolkit, we emphasized two elements: an extremely friendly user interface for beginners to Excel and finance, and also the flexibility to make detailed adjustments to the analysis for more advanced users. And so what we have here is the first page of the toolkit, which has 4 easy-to-follow buttons on the left panel and screenshots of all the various tabs within the toolkit. By simply clicking on the tab, it takes you to that page, and you can see over here we also have these buttons that you can use to easily navigate throughout the toolkit. And so here we have the discount cash flow analysis, followed by a DCF sensitivity analysis. And on the next tab, we have the income statement, followed by the balance sheet, the cash flow statement, the competitor key statistics page, and finally the assumptions table. And going back to the first page, we're going to go through a quick example, a walkthrough of how to use our toolkit. And so let's say we use Google, but somebody makes a typo and spells it GOG, and they try to retrieve the financial data. They're going to get an invalid ticker symbol just to make sure that they don't get any inaccurate data. So they go back to their ticker and correctly type in Google's ticker, and they click this button right here, which goes to Yahoo Finance using a web query and essentially collects all their financial statements and puts it into our toolkit. And so what we can see here by clicking on the income statement is that these 3 years are collected from Yahoo Finance, and these black percentages are the percentages of revenue. And what we can see here is a projection for 10 years after the most recent year. And the percentages in blue are percentage of revenue as well, but they're in blue because they can be changed in order to project each line item. And so it's essentially the same thing throughout the statements. If you go here, the balance sheet, we have the 3 years and then the 10 years of projections. And the cash flow statement. So going back to this page, we could follow to step number 3, which is to click to input assumptions. And so this button takes out a user form, which is linked to this assumptions page. So really you could put it in this user form, or you could put it in this table. It's up to the user. You can also click this button over here. It's the same thing as the one from the cover page. And so what we provide here are 4 line items that you could change for your projections: the sales growth, cost of revenue or COGS, R&D, and SG&A. And we provide the option for the user to put it in as a percentage of revenue. And over here on the historical column, we have a column that just shows what the historical growth rate was for Google in this case last year, along with the cost of revenue and so on, just to provide a user reference for them to use for their projections if they do not have any idea where to anchor their assumptions. But it seems like Google's doing pretty well, so we could put in some assumptions here. And so I'm just going to go ahead and put 32, 35, anything. This is just for the sake of the example. And let's say it drops down and begins to mature over here, and stops at a growth rate of 5%. And we see over here that it says you could check the years not being projected after inputting the assumptions values. And so we're going to just project it out until 2020, and we do not have to project it out until 2022 if we don't want to. And so the cost of revenue, I'm just going to keep it the same, just to keep things a little bit more simple. Okay, and R&D, same. And SG&A, I'm also going to keep the same. And our WACC value, which is the rate at which the cash flows are discounted at, I'll just put 10. And so right now what we're going to do is click these checkboxes because we don't want to project for these 2 years. And what you can see happen is that this column takes on the values of its previous column. And so you can see the same thing happen between these two columns when I click this. We just want to provide the user the option to project out for 10 years when really they do not have to. So that's step number 3, and going back home is step number 4. But first we might want to look at our DCF and what we have here. And so this is our discount cash flow analysis. And it's a very basic DCF where you find your free cash flow, you discount it back by the WACC, and add it up, solve for the terminal value, and we could eventually find the theoretical price per share by taking the equity value and dividing that by the current shares outstanding, which is also taken from Yahoo Finance. And below the theoretical price per share, we have this current price per share, and this price is accurate within the minute. Because our theoretical price per share is $1,870 and the current price is just over $800, we're saying that it's currently being traded at a discount of $1,000 approximately, and so that it's undervalued. Of course, the assumptions that we used were very arbitrary and probably very inaccurate, which is why it's kind of inflating Google's stock price. And so below here we have the discount cash flow sensitivity analysis, and what we do here, which is step 4, is provide a way to input different values of WACC and different values for your terminal perpetuity growth rate. And so you click this button over here, which pops up another user form. And so a low range, I'm going to do 8%. High mid-range, I'm going to do the 10% that we used in the initial case, and a high range, I'll just do 12. For the growth rate, I'll do 3. Mid, I'll do 5, just like we did before, and high range, I'll do 7. And so what this creates is 4 different data tables for your enterprise value, your equity value, your terminal EBIT multiple, and your price per share. And we use conditional formatting to show whether the value was above or equal to the value that we initially calculated. Lastly, what we have over here is our competitor key statistics page, and it's a really neat feature. So we have our company that we're looking at currently, along with a couple competitors that it gives from Yahoo Finance, along with the industry. And this blank row just means that Yahoo Finance has some data, incomplete data on a private company, and because it's private, it couldn't collect much useful data. So we just cleared it, but we wanted to indicate that, we did clear out some private data. And what we have here are different, metrics that the user can use to compare the company to different competitors or even to the industry, and also look at the mean and the medians just to see where it stands against them. If they do not like looking at numbers and they don't make much sense of it, then they could call these graphs over here, which just visualizes this data. And one really great thing about this is that you could choose high certain ones, you could bring it back. It's very flexible, and you could just show what you want, take away what you want. And so that is a very quick run through of our toolkit. If you have any questions, please post some comments below and I'll try to get back to them as soon as possible. But thank you so much for taking a look at our toolkit, and I hope you enjoyed it.